Well, welcome, and thanks for joining us for this conversation with my team on your behalf. My name is Justin Davis, and for those of you that don't know me, I've got a couple guests on the show today to talk about some opportunities and risks and questions and concerns that we're all hearing from our clients. And to say the last few months has been unprecedented would be putting it lightly, and it's really brought me back to the roots of what I believe. And I believe that moments are more powerful than money. And I believe that creating moments of impact in your life, in your family's life, and in your community is what truly gives your life's work meaning. So in that spirit, one of the things that we do at Impact Financial Strategies is we're always trying to bring the best thought leaders to you. And so today I'm really excited to introduce you to a couple of my own personal advisors. There's a lot of concern out there. There's been a lot of legislation, and we think that there's a lot of opportunity as well. So today, for you, my client tribe, and for the client tribe of my professional colleagues that we've brought on the line with us, we hope you enjoy this. We're going to try to keep it short. It's just a few common questions for each of us, and then some opportunities that each of us are seeing in our own particular field. And again, keep in mind that this is not meant to be individual advice for anybody that's watching, anybody that's tuned in. These are my personal opinions, Thomas's personal opinions, and Tim's personal opinions on what we see and how we're advising our clients. So in full disclosure, if you do have some other questions to follow up, please reach out to any of us or to your current advisor for that. So today I want to introduce you to a couple of my great friends. Both of these guys I've known for many, many years. We've served together on nonprofit boards. We volunteer together, and we've worked together with a lot of clients mutually and in capacity for them to create confidence and clarity on their path to a work optional lifestyle. So first, let me introduce you to Tim. Tim Brittenson is an attorney in town. He's been practicing for 16 years. His first 4 years were with the IRS. He's got a firm in northern Colorado called Otis and Bedingfield. And yeah, so Tim, thank you for fitting me in and coming to my clients and to talk about this.
Okay. Well, thanks. Hi, Justin. Hi, Thomas. I'm looking forward to being part of the conversation. I agree to say we're living in unique times is an understatement. And I know that the guidance and the thoughts of trusted professionals are important to me as well as everybody else. So thanks for putting this together, and thanks for inviting me.
Yeah, well, and geez, talk about legislation and tax changes and stimulus checks. I mean, tax day is come and gone, and it still isn't even here yet. It's kind of like Groundhog Day when we're working at home. Tax day seems like the same thing. So our next guest is Thomas Ahrens, and he is a partner with Eide Bailly here in Fort Collins, and he's been practicing. He's been practicing CPA for 14 years. And again, both of these guys are great stewards of our community. And Thomas, thanks for coming on board with us.
Yeah, absolutely. Thanks, Justin, for setting this up and handling all the IT. I know Zoom meetings are what we're all doing these days, it seems like, but looking forward to adding to the discussion.
Yeah, good. Well, so let's just kick this off. Let's try to keep it on track. And I thought that what we would do is we would ask a few common questions and try to give some short answers. We might not get into the answer for each of the questions. And that's where if anybody wants some follow-up, we encourage you to reach out to me. I can connect you to Tim or Thomas. So I guess first question is something that my clients want to know. Are they the only ones asking this, or are they the only ones feeling this way? So I guess my first question is for both of you is, tell me a little bit about the frequent questions that you're getting, or really kind of how your clients are feeling right now. Why don't we kick it off with you, Tim?
Well, I would say they're very uncertain, and in the legal climate we're in, a lot of what they're asking have to do with their contracts. What contracts whether it's leases or supply agreements or various things like that. A month or two ago, they were very worried and wondering what they could do to either get out of it, what they would have to do to comply with it. But I was hearing a lot about that. And then if I had any special insight into what was next.
Yeah, and what about, how about you, Thomas?
Yeah. So my business clients really, like Tim said, I think there's a lot of uncertainty out there. We just didn't know which way to go with certain decisions because SBA was coming out with new stuff every day, or Congress was coming out with new stuff all the time. So a lot of uncertainty, but surprisingly, there was also a lot of opportunity. People wanted to really relook at some plans and we're excited about some of the changes happening. So uncertainty, but definitely some opportunity.
Yeah, and same with me. You know, the big thing is clients just don't really know what to expect in the short term, midterm, or long term. I mean, is the coronavirus going to come back? Is this market, you know, when I put my last video out, it just happened to be on March 23rd, which so far was the day of the bottom of the market. And at that point, I thought there's no doubt that we're going to go up from here. It's happened. Now the market's gone up for almost 8 weeks straight. So which way does it go? And is there going to be more opportunities, or should we chase these returns? You know, that's from the business standpoint. And then from an individual standpoint, it's questions like, well, you know, we spend so much time in our house. Do we need to downsize? Do we need to upsize? You know, sharing your house with your family is a little bit different when it's 24/7 than it is when you're at home at night after work. I think a lot of clients are just, their questions are about their lifestyle choices. And then, you know, how about where are the opportunities, and is the worst behind us? You know, so I guess let's start with the bad side of this, and tell me where you guys see the biggest risk of what's happening now. And as we look forward, as states are starting to reopen and the rules are all over the board, you know, what do you see as the biggest risk? Why don't we start with you, Thomas, this time?
Sure. So, you know, from a taxing point of view, states are broke. You know, everyone's going to the unemployment line, and with the decrease in consumer spending, there's not a lot of sales tax out there right now. So what we're kind of seeing or thinking is that there's going to be a bump in rates. And I think even today, there was a bill introduced in Colorado, maybe trying to increase the Colorado tax base. So we're looking at tax rates, but also the new rules around how to get that tax base up to pay for states and to pay for the few trillion that the government has spent so far.
Yeah. How about you, Tim?
Well, sort of to piggyback on what Thomas said is I do think that both the federal government and the states are going to be looking for new revenue sources, partially to offset what's probably going to be a kind of depressed consumer market for a little while. But with all the federal spending, which has been good and necessary in a lot of ways, and an easy target in my practice is going to be the estate tax. The estate tax exemption has been very high for quite some years, much higher than it has historically been. And I don't know what other tax rates will be affected, but it just seems like the estate tax exemption is going to be a pretty easy target. Whether that's next year or 4 or 5 years from now, I don't know, but I think that's probably coming.
Yeah, well, and similar to both of you guys, I think that the single biggest risk is, well, obviously, besides the risk to life, and if we face another outbreak of this in the fall, who knows what that will do. And if we go into shutdown again, I think that is a clear risk. We don't have enough data yet to know whether that's really gonna happen or not. But you know, I think absorbing this liquidity that was created to keep businesses solvent is going to be an issue. And how do we pay for it? How do we pay for it long term? How do our kids pay for it? If you're watching this, you're probably one of our clients, and so the reality is the burden of unraveling this is probably going to get spread to us. And the biggest question is, does it work? does this economy come back like the stimulus suggests that it does? And can it come back without hyperinflation? And once all this money is in the system, can it get reabsorbed? So, for me, I think that's the big risk. I mean, I think the markets are going to continue to bounce around this year. I don't necessarily think that the volatility is behind us. I'm hopeful that we've seen the bottom of this pandemic, but I absolutely believe that we will probably see some more bouts of volatility and some new buying opportunities. So, let's instead of the risk, let's talk about the opportunity side of it. Let's talk about some of the fun and what some of the things that you're doing with your clients or what you're seeing. I mean, for example, in my world, I think that the opportunity to take control of your investments and distribution strategies is a huge opportunity with some of the laws. What I'm talking about very specifically is the ability to suspend mandatory distributions. And if you've already taken them, paying them back if it makes sense. So really analyzing where you're at currently from a tax standpoint, maybe readjusting some of your portfolios to make sure that your risk tolerance is in line with your goals, with the assumption that eventually tax rates probably will go up to pay for this, and having some strategy to pick when and how and where you're going to be taking some of your money out of your retirement plans. That's a great opportunity. The other thing is for clients that are solvent and clients that did have the reserve. I think there's going to be some additional opportunities to get back into the market without necessarily chasing this upside. So I think there's going to be some real money made by people that have the patience and have the wherewithal to take advantage of those. How about you, Tim, since you're up?
Okay. I think for some of our high net worth clients and who have estate tax issues, even under the high exemptions, I think the stimulus and the guaranteed low interest rates, the uncertainty in the economy is going to guarantee some low interest rates for a while, as well as some potential good valuations. So for people with estate tax issues, now is a great time for some gifting that may not come around again for a while. And then for business clients, just if they took advantage of the PPP program or the EIDL, the other disaster relief program, if they've been a well-run business, they have access to some fairly inexpensive money that they'll be able to use to make their businesses more productive and efficient. So I know that is something that's happening.
Yeah. How about you, Thomas?
Yeah. So from opportunities, Tim hit on some of the big ones with PPP, the EIDL loan program. One of the ones that's not being really talked about too much is some of the advantages that the CARES Act put in with net operating losses. So businesses that had maybe had some down years, you were carrying forward those losses. The new rules allow us to carry some of those back. So there's some opportunity to improve people's cash flows by getting some tax back from prior years. The other one that we're really kind of excited about is that delay in filing.
And hey,
not just because
Thomas, on that's good info. Would you send that to me so if anybody reaches out, I can send some info on that, because that is a huge benefit.
Sure. Yeah, absolutely. The other one is the extension of the filing deadline, and I was gonna kind of joke a little bit. It just extended my tax season by a few more months, but it actually extended a lot of other deadlines within the tax code. So things like 1031 exchanges, 83B elections, all have some revised deadlines. So, something that most people wouldn't really think about. They want to get their taxes done by April, but there's a lot of opportunity there. And with the extension of the deadline, not just for the tax returns, but for other parts of the tax code. So we're excited about that and trying to have some conversations with clients around those.
Yeah. Well, great. What about, so, I mean, let's dive in specifically if there's anything that comes to your mind. I mean, I'm sure people have already heard ad nauseum about the PPP and the stimulus, but Thomas, from a tax standpoint, is there, other than maybe that look back, is there anything else that you see as far as implications of what we've gone through recently, whether it's legislation or tax?
Yeah, so just a couple of high level points on PPP. Last week there was some new guidance out, extended that 8-week period to a 24-week period. And so you have the option of kind of picking which period you'd like to use. Extended the payment terms out to 5 years instead of 2. And instead of the 75% on wages, it's 60%. So those are the little high levels. But, there's a lot of people starting to get through their 8-week covered period and trying to decide, do we pay bonuses? Do we extend this to 24 weeks? And we're having a lot of those conversations. The other one, the economic stimulus payments, were a pretty hot topic for a while. Those have kind of cooled off because a lot of people have received their payments. But the question we're getting a lot of is, I got a payment based off my 18 return. Now I'm filing 19 and my payment should have been less or more or something. How does that get trued up? And so we're waiting on some guidance on that. My personal guess is there'll be some kind of reconciliation on your 2020 tax return to true that up to some form or fashion. So those are the big ones. But, RMDs, like Justin mentioned, we're getting a lot of questions on that, on does it make sense to take an RMD, pay it back? And then just in general from their business clients, they've had a lot of liquidity through this programs that are out. And now the question is restarting their business. Are they going to have enough capital to restart their business and get the doors open back up? So we're having a lot of conversations there, but that's not necessarily in the legislation, but it's a very big business concern right now.
Yeah, and most of this legislation really had a lot more to do with tax and retirement accounts. Anything, Tim, that you want to add on any of that?
Anything particular that Thomas was talking about, or just some?
Yeah, or just the legislation and opportunities, some things that maybe were considered antiquated a year ago, or anything.
Yeah, well, yeah, and probably the biggest thing that I've been talking to clients about, and clients have been pressing me on, is the estate tax exemption has been very high for a long time. It's over $22 million. So if you have a net worth of under $22 million at the time of your death, you really don't need to worry about estate taxes. You don't have to go back that far, and the estate tax exemption was only $600,000 apiece. There were an awful lot of people that were captured by that and had to focus a little bit more on things like gifting and how to move money out of their estate. It's something that people haven't thought about for a long time. I think that there's probably some realistic chance that the estate tax exemption is going to come down. It's going to be cut in half in 2026, regardless of what anyone does, because the legislation that raised it to 20-some million is going to sunset in 2026. So it's going to be going back down to 10, and it could go back down lower. That creates some urgency. I mentioned it earlier, that right now with interest rates and with this very high exemption is an ideal time for people that feel like they've got the kinds of assets and the kind of liquidity to support their lifestyle to begin moving some of their assets out of their estate. This opportunity over the next year or so, the window might be closing sometime, and no one can predict when. But there is a unique ability right now to move a lot of different assets to your heirs without having to use as much of your estate tax exemption or pay any gift tax. It wasn't created by this legislation, but this is a unique moment that I think people who have that concern or are worried about it should talk to their accountant, talk to someone like Thomas, talk to someone like you, Justin, talk to your attorney, and take a look at your entire your circumstances, your portfolio, and see if now is maybe the time to begin taking advantage of some of this opportunity.
Right, and I know we've we've talked about that with some shared clients, and people are taking advantage. I mean, nobody really knows what'll happen or what the tax
Right.
law says later, but and for me, I think the single biggest question that I'm getting is, how will we know that the investment side of this is behind us? And the simple answer for me is data. I mean, right now, bonds are telling us one thing, the stock market is telling us something completely different. And there's a lot of optimism priced into the market at today's levels. I think yesterday the NASDAQ hit an all-time high or went above it. And regardless, with what we've seen this year, to have the market that's almost back to even is a little absurd, especially when we don't know what's going to happen. So data is what we're looking at, and we're taking advantage by upgrading the holdings of clients' portfolios, reevaluating the risk tolerance. We've seen the market move bigger and faster than we've ever seen before. So if we're back to even or we're back close to it, and that was something that kept you up at night, now's the time to be reaching out to me or even to your advisor. If you're one of Tim or Thomas's clients, now's a good time to reassess that risk. And I think there's going to be some real opportunities, big picture, long term. I think the U.S. is going to come out of this a little more nimble. We've seen what it's done to supply chains globally, and things that we took for granted just 5 months ago, we really can't take for granted right now. And having some conservative plans in place, like the first responders that are on the front line of this. They practice and practice and practice for when these type of emergencies really happen. And, we've seen it, and we've seen that big parts of our country weren't prepared. So I think that coming out of this, I think there's going to be some opportunities for companies to put us all in a position where we're a little better prepared for that. So, I think those are the main things. And, we've got data, we've got releases, there's stuff that we're following every single week from these unemployment numbers, which were 9.5 million better this last week than anticipated. So I think there is a lot of silver lining. So so I think that's pretty good. Go ahead.
Hey, Justin, could I ask maybe you a question?
You bet.
I see things from a tax standpoint a lot. You're watching the market. I just wanted to see kind of your thoughts on what are you looking at in the market to know that we've recovered? Is it just the Dow, or what factors are you looking at in the market to know that we made a recovery?
Well, we knew that the data was going to be bad in absolute numbers. So for the last couple of months, we've been looking at changes in direction of the data, right? The unemployment rate starting to go down, the pure numbers of new claims going down. So the trend, which direction is it as opposed to the actual numbers? And as we get into July and we get into Q2 earnings, we're really going to see how bad it was from an absolute value and how big the hole is. And, reopening does not mean normalization. So when we look at that, it's going to be year over year numbers, not quarter over quarter, because we're coming out of it. There's a good chance that we are already out of this recession. But a 0.01 growth rate is not exactly robust for our economy. So watching the absolute numbers, now that we hope that the direction is the right direction. First, we were looking at for the direction to turn, if that makes sense. Now we're looking at the real numbers and how long that's going to take to dig out. And then also look at what rates are doing. Tim mentioned it earlier. I'm doing some rebalancing in a lot of client portfolios because I think rates, the Fed has basically said they're going to keep rates really, really low for a really, really long time, and they're going to support our economic engine. Well, when consumers and when the market is really believing that we're going to go into a growth rate, rates are going to go up. So we've got two different forces going at each other. And when we get some consistency between the data, the S&P 500 global growth rates, and some improvement on the absolute level, those are some of the things that we're looking at.
So I have a question for you too, Justin. What So is there a best strategy, or is there something you're specifically looking at for your clients in terms of their portfolios right now?
Yeah, and again, this isn't specific to any one client, but yeah, for a lot of clients, we're making some barbell type of strategies where we're saying, hey, we're going to go conservative with some U.S. Treasuries and some counterintuitive investments to take advantage of the opportunity set that we see is going to happen between now and the year end. So we're still long-term asset allocators. Historically, the market has come back to reach new highs. We believe that long-term the market will come back to new highs. But this is a time where some tactical rebalancing can really benefit our clients. And we also believe that that in the current market condition, it can actually reduce their risk. So it's a unique opportunity potentially to reduce risk and enhance opportunity across the board. So those are some of the strategies that we're doing. We're saying, hey, if you need this money for the next 12 to 16 months, let's get it out of the market now that it's recovered. But if you can stomach the volatility and want to take some opportunities there, I think that there will be some more. So yeah, hopefully that answered you guys' questions. And you know, I didn't want to be talking too much about the markets, but I really, really appreciate both of your inputs and hearing what your clients are hearing and listening to the tax strategies and looking back and maybe seeing if there's some opportunities to go back and get some of our tax money back. So thank you both. So I guess in closing, let's, you know, if either one of you have anything to talk about as far as silver linings and anything that you would like to say, let's start with you, Thomas.
Well, I would say silver lining for me personally is reestablishing goals. What's important in life. This has obviously changed the new norm, and for business clients, I would say it's made us realize how important being able to innovate is. How fast can we change our business structure? How fast can we do that within an industry or just a geographic location? So, you know, silver lining is we're going to look at business a little bit differently. That doesn't mean just more IT, more remote workers, but it does mean that we're going to have to look at things a little differently. And companies that can innovate, I think, are going to come out of this well. Ones that can't innovate, like normal, might have to look at restructuring.
Yeah, and I'll piggyback off of that too and just say, you know, like I mentioned earlier, boring is suddenly sexy again. You know, having a few months cash reserve to get through anything, no matter how good the market feels or how confident you are. Prudent investment philosophy has proven to help people sleep at night a little bit better. So, you know, whether it's a business that is able to adapt or individuals that kind of take a step back and say, hey, let's make sure that we're okay first. How about you, Tim?
Well, it's not much different than what you guys have already said. I think whenever there's a kind of a jolt or a surprise to the economy, it reminds business leaders how important it is to understand their numbers, understand their business, all aspects of it, to be efficient, to be lean. Times like this reward those businesses, and the businesses that make it through but maybe weren't functioning that way, I think are going to be better, stronger businesses going forward. So I think the businesses that come through this are going to be stronger, more efficient, more innovative than what went into this. So, I mean, that's the silver lining, I say.
Yeah. Well, you know, and I think for me, you know, the clients that we work with generally are successful and optimistic retirees or first generation business owners, and, you know, top real estate professionals. And, you know, they've checked off all the boxes, but they don't always know that all the pieces are working together effectively. And is their life's work built to give them the life that they want? So This current pandemic has given a lot of those people a little bit of time to think about that. And so our goal is to help clients think about the moments that maybe they missed and when they're going to get back to them, and when they do come out of this, what are they going to do differently? And you know, the money is never the ends, right? The money is the means to the end, and the end is living the life that you want and creating those moments of impact with the people that you love and in your community. So, and taking a refresh of risk tolerance. And if you couldn't handle what we've seen so far year to date, then it's worth having a conversation with your advisors to make sure that you're positioned to get back and spend your time doing what you're doing. So, you know, anyway, you know, at Impact Financial Strategies, helping really cool and successful people retire with confidence and clarity. That's what we do. Helping, inspiring them to create moments of impact in their life, in their family's life, and in their community. That's really who we are. And what we've been through over the last few months really brings it back to what is most important to you, and how do we do that in a way that works in everybody's life. So, you know, as we close, you'll notice that I've got some required disclosures that I had to put on the screen for all of us. As we close, again, we just hope that you're safe. We hope that your family's safe. We hope that your community has come together, and hopefully this has been valuable for you. And if there's any follow-up questions for any of us, we would just ask that you reach out to me, you reach out to Thomas, you reach out to Tim. And other than that, anything that you guys want to add?
Nothing here. Thanks for the conversation, Justin. It's been great.
Yeah, and Thomas?
Agreed. Thanks, Justin. And I would say another silver lining too, just is a great time for planning, whether it's legal, financial, taxes. There's a lot of new rules and laws out there. There's a lot of time, or a lot of good. This is a great time to just kind of take a look back at your plan and see if you're where you want to be.
Well, thank you both. I mean, hopefully this is a moment of impact for anybody watching. Hopefully you got some good information, and we're here to serve, and we're here to help, and we're here to deliver confidence and clarity. So thank you for sticking through this. And if you have any questions, I will send out an email, or if you have any specific questions about any of the stuff that we talked about, please let me know, and I'll get you into contact with anybody that's on this call. So thanks, you guys. I really appreciate it.
Okay. Thanks. See ya.
Thank you.